Hello everyone, welcome to the Stock Trading Tutor channel. In this video, we'll be looking at a line chart and how you can apply it in your trading technique. What is a line chart first? A line chart is a graphical representation of an asset or a stock price's historical price action that connects a series of data points with a continuous line. Generally, this is the closing price of the stock. So this is one of the most basic type of chart used in finance and typically only depicts a security's closing prices over the time period. Line charts can be used on any time frame, but most often used on a day-to-day price changes. A line chart is a way of visually representing the asset's stock price history using a single continuous line. It's easy to understand and simple in form, and it only depicts the changes in an asset's closing price over the time. And because of its simplicity, traders look to identify patterns or trends. They may opt for chart types with more information, such as candlesticks. So here is an example of a line chart which has been applied on the S&P 500 large cap index chart. So this chart has been sourced from stockcharts.com. So here you can see how the line chart gives you a direct representation of how the market has moved over the time frame from this September to March. So this is simple and easy to understand to the price history of the stock. So a line chart gives traders a clear visualization of where the price of a security has traveled over a given period of time, as we have already seen. So because line charts only show the closing prices, they reduce the noise from less critical times in the trading days, such as open, high, and the low prices. Since the closing prices are typically considered the most important, it is understandable to see why line charts are popular with investors and traders. Other popular styles of charts include bar charts, candlestick charts, and point and figure charts. Traders can use line charts with other charts to help see the full technical picture. So let's look at some of the major benefits of using line charts. So here we'll see two of the major benefits. First being clarity. So traders can sometimes be overwhelmed with too much information when analyzing a securities chart. The trading term paralysis by analysis describes this phenomenon very well. Using charts that show a plethora of price information and indicators can give multiple signals that lead to confusion and complicate the trading decisions. Using a line chart helps traders clearly identify key support and resistance levels, trends, and recognizable chart patterns. So, this is generally used by traders who prefer to use long term investment or at least slightly longer term than intraday, that is within the day's trading. Because within the people who trade in the smallest amount of time, they generally prefer to see the high lows and candlestick charts as they try to make profits within those small marginal changes also. So when you're analyzing a company for long-term investments, having too much information such as the opening price and the closing price is sometimes unnecessary. So those type of investors generally can sometimes prefer to use line charts when necessary. So here we can see the Nifty 50 indexes line chart. This is the one-day line closing price, which has been plotted on the chart. So this indicates from August of previous year to the current August movement of the stock price over the time period. So another benefit of using the line chart is that it is very easy to use. Line charts are ideal for beginner traders to use because of their simplicity. They can help teach basic chart reading skills before learning more advanced techniques, such as reading the Japanese candlestick patterns or learning the basics of point and figure charts. Volume and moving averages can easily be applied to a line chart as traders continue their learning journey. So, now let's look at some of the limitations of using the line charts. Line charts may not provide enough price information for some traders to monitor their trading strategies. Some strategies require prices derived from the opening price, highest price, and the lowest price traded in the day. So, for example, a trader may buy a stock if it closes above the high price of the previous 20 days. Also, traders who use more information than just the closing price do not have enough to backtest their trading strategy by using simple line chart. Candlestick charts, which contain an asset's daily open, close, high, and low prices all in the same unit, may be more useful in these cases. So, for example, let's look at the candlestick chart here. So, in this candlestick chart, generally traders who are intraday trading or you trading for this short term can generally make some profit in these small gains and marginal changes. So, here in these price movements, this is just one day's movement of the stock price, this overall chart in itself, and this is a 5-minute candlestick chart. So, when the stock moves, like this is the Nifty 50 index, and here you can see it has moved around 20 points in just within 5 minutes. And there are stock traders who will try to make profits within these movements of the price. And so here also again we can see the stock has moved in an upward trend in the period of a small 25-minute. So since these are all 5-minute charts, there are traders who would have made profit within these five candlestick movements. So that is from here, which is around 10,825 levels to the 10,870 level. So within this movement itself, there are traders who would have made the scalp margin traders, and they will try to make profits by using huge volumes rather than long-term strategy. So in these type of information cases, traders will prefer to use a candlesticks charts instead of a line chart. So this line chart is also using the data points of 5 minutes closing prices, and compared to the candlestick chart, the line chart does not provide enough information. Even in this small, in these periods, we can see compared to the line chart, there is just not enough information for the trader to make his buying and closing trading signals to be generated. So here are the sources, and that's the end of the video for the line chart. You can use the line chart from various purposes, and if you'd like to learn more, here are the sources for from where we have collected our information. So thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel. If you'd like to start trading in the stock market, you can create your Demat account with Alice Blue. With Alice Blue brokerage services, you'll get excellent exposures and margin for trading in the stock market. Just click the link in the description and fill out your details.